Welcome to ForexTV.com's PM Exchange. It's Thursday, January 10th. I'm Remy Hoki. Today I'm joined by Joseph Trevisani, Chief Market Analyst at FX Solutions. Good afternoon, Joseph.
Hi, Remy. How are you?
Great to have you on the show today.
Thanks.
Well, in today's session, we saw US dollar weakness across the board. And in today's session, we had both the unchanged rate decisions from the BoE as well as the ECB. But I think the market focused on Bernanke's comments this afternoon. And we saw US equities gain in the session because Bernanke signaled for further rate cuts.
Certainly.
But Joseph, if you could weigh in on the comments and whether or not you expect to see a 50 basis point cut at the end of this month.
I'll tell you, it was kind of an interesting day. All three of the central bank, well, one speech and two decisions were completely expected. For the BoE, there was some speculation, you might say. The market had it priced about 50-50, whether they would cut today, but certainly another cut is expected. The ECB, nobody expected them to do anything. They didn't do anything. They probably increased their rhetoric just a little bit, but nothing of really any note. It's pretty much status quo. The market fully expects the Fed to cut at the end of the month. I think the market's probably a bit surprised by the directness of Mr. Bernanke's speech. I would certainly agree that the expectation for a rate increase has now moved almost completely to 50 basis points. The Fed certainly knows and knew how his speech would be read by the market. It is highly, highly unlikely that they would excite expectation for a 50 basis point cut and then not deliver. So that probably gave a little bit of weakness to the dollar. But overall, what you're really seeing is a front loading of already expected rate reductions. Not, I don't think, at this point, an increase in the overall amount of reduction the market's looking for in the next 3 months or so.
Well, Joseph, let's talk about how rate differentials translate into the major currency pairs, starting out with euro-dollar. So we have dovish comments from Bernanke, and today we got hawkish comments from Trichet, and we saw euro-dollar break above 148. But in the short term, based on the fundamental outlook as well as your technical analysis, where do you see euro-dollar headed?
Well, I'm becoming part of a diminishing band here. I still think that as the year moves on, the euro will weaken and the dollar will strengthen. The time frame on this is becoming a little longer, I would say, but the comments from all parties today were not radically different. In fact, they were not different at all from what they've said before. There really isn't any great change. Now, the market, especially the euro-dollar, has been treading water. It's been going sideways. So the degree, even though it was small in difference that we received in the statement today, was enough to make the market move. That, I think, is actually more telling because it means that the markets are not really expecting a lot of change out going forward, and they were looking for something to react to.
And Joseph, we saw the euro gain across the board against the sterling to another record high, and also against the CAD, Swiss, and the yen. So if you could give us your outlook for euro sterling, since we've been seeing a rally in the pair, do you expect that to continue? No,
I don't. I think we're going to have a topside very soon in the euro, in the sterling. Again, none of the rhetoric was any different. Everyone expects the BoE to cut rates in February. They'll probably wait until they see the quarterly inflation report, which comes out, I believe, on the 13th. So the same for the ECB. They increased their rhetoric a little bit. The Fed increased its rhetoric a little bit on the other side, on the dovish side. But none of these are different in what the market has seen before. So I think we've seen certainly a recent top in the euro, in the sterling, and it will continue to go down because it does look, even in the MPC and the BoE's own admissions, that things are progressing faster to the downside in Britain than they are on the continent. That's status quo right now.
Well, Joseph, if we could shift our focus right now to the Japanese yen. In today's session, dollar yen opened around 109.85, and once we got the comments from Bernanke, we saw dollar yen fall to 109.10. But given that we're going to be seeing slowing growth across the globe, and also there are no expectations of a move from the BOJ. If you could give us your outlook for the Japanese yen against the dollar as well as the other major currency pairs.
Sure. I would say that any BOJ rate increase is probably one of the most expected and longest deferred we're going to see in financial history. I mean, we've been expecting one forever, and it's not going to happen. The Japanese economy is again showing signs of flirting with recession. Deflation has not been completely whipped or eradicated. I mean, I just don't see, when you add the potential world slowdown to what's going on in Japan already, I just do not see the Japanese BOJ raising rates. Mm-hmm. That said, you have a real balance here between what's going on in the United States, what's going on in Japan. You're going to get a lot of very equal, I think, negative news out of both economies, so there's not going to be a lot to drive the dollar-yen one direction or another. Mm-hmm. However, we of course then do have the euro-yen. The euro-yen is an interesting case. It has been averse always to any sign of tension in the world, be it economic or political. It is proving a bit more resilient this time. Certainly the Fed's admission today that it sees U.S. growth in more danger than it ever has before is something that you would look at to be an averse sign, but it actually went up today. So you have, I think, on balance, probably some support for the dollar-yen.
And Joseph, while we're talking about growth concerns around the world, tomorrow in Canada we'll be getting the employment report out in the morning session. And we've seen continued rallies for the gold futures. And in today's session we saw crude pull back. But given expectations that the BOC will also be cutting rates this month, if you could give us your short-term forecast for dollar CAD.
I knew you were going to ask me about that. Dollar Canada, you can look at it a number of ways. I mean, one way you can sort of look at is the Canadian economy is sort of, hope there are no Canadians listening when I say this, but as an adjunct to the American economy. I mean, it's not entirely true. Of course, there are currents internal to the Japanese economy, to the Canadian economy, but the difference in size is such that what the United States does or where it goes is where the Canadian economy usually follows. The dollar Canada has been very strong because of commodity prices and because of oil prices. Those, I think, are ending. If the world, as we discussed last week, if the world is actually going to slow down, then both oil prices and commodity prices in general are going to come off. That is not something that will support the Canadian dollar. The price in gold, gold is always an interesting commodity because it's not simply a commodity that rises and falls on industrial or economic activity. There's an enormous psychological factor to gold. It is almost always viewed in many, not almost always, but it's viewed in many parts of the world as not only a hedge to inflation, because that is true, but as a, how do I put it, as a psychological barrier or a psychological help or support when things appear to be getting worse. That's something which has really factored into the gold price as well. The commodity aspect will decline. That psychological aspect I don't think is going to decline just yet, because one of the things it's about is worry aside from worry as part of the economic slowdown.
Okay, and Joseph, last but not least, before we wrap it up, if we could take a look at the upcoming sessions. Looking ahead on the data front here in the U.S. next week, we'll be getting plenty of economic data. We have inflation, retail sales, housing starts, as well as tick data and the Beige Book. So what do you think is key for Forex traders to be paying attention to on the data front?
Next week, I think without a doubt, it's retail sales. The store numbers that came out today, Walmart I think was up, and by and large the other large chain stores which reported today, Macy's and Kohl's and I think JCPenney, were all down. Retail sales is the focus of the American consumer and the American Consumer Statistical Reporting right now. It is, last month in November, it was much stronger than expected, double the inclusive one and triple the, I think, ex-auto one. Very high numbers. This current month in December, the projections are about 0.1%. If it comes in anywhere over 0.5%, you're going to get some pretty serious support for the dollar, because again, one of the assumptions that's going on there for the slowdown in the American economy is it's going to be a consumer-led slowdown. We've seen this in a number of reports. People are talking about it quite a bit. So that'll be the most important one. We have both PPI and CPI out next week. Now, the market will react to these numbers if they're out of line, pretty much out of habit, maybe out of tradition. But Mr. Bernanke has already told us the Fed's view on inflation. And they're not viewing inflation. They know that it has potential to go higher. They've seen it go higher. They're worried about oil prices. But their real concern right now is economic growth. They've already said that. So no matter what the numbers come out on when they come out, I think they're Tuesday and Wednesday, the Fed is not going to change its policy. It's still going to be cutting rates at the end of the month. So I don't think that's that important. We also, I think, have industrial production, which will have some people will pay attention to, but it won't do much to move the market.
Okay, Joseph, as always, thank you very much for insight into the Forex marketplace.
You're welcome, Remy. Always nice to be here.
Thank you. This has been your Forex News with Joseph Trevisani from FX Solutions. Next up, we have your equities and commodities wrap-up for the day. U.S. stocks ended another erratic session with gains on the day. Equities saw solid gains after Fed Reserve Chairman Ben Bernanke signaled more interest rates to come. Meanwhile, reports that Bank of America is in talks to buy Countrywide Financial lifted stocks into the afternoon session. In today's U.S. data, the Labor Department reported that initial jobless claims fell by 15,000 in the latest week. The 4-week average for jobless claims fell slightly to 341,000. Although the figure is still high, the average is at its lowest in a month. At the closing bell, the Dow Jones Industrial Average rose 117.78 to close at 12,853.09. The tech-heavy Nasdaq added almost 14 points to end at 2,488.52. The S&P 500 gained over 11 points to close at 1,420.33. In the fixed income market, U.S. Treasury bonds were mostly lower on the day as U.S. stocks rallied. The gains in the equity market paired safe haven investment into bonds. The benchmark 10-year note was down with the yield at 3.9%. It was up 8 basis points from late yesterday. And the 30-year note fell with its yield up 11 basis points to 4.45%. The 2-year Treasury note was nearly flat with the yield at 2.71%. And taking a look at energy, NYMEX crude oil futures declined over 2% on the day. There are intensified concerns that a slowdown in global economic growth could reduce oil demand. February crude fell $1.96 to close at $93.71 a barrel on the NYMEX. Earlier today, the EIA reported that U.S. natural gas inventories fell 171 BCF in the week ended January 4th. February natural gas futures rallied 17.6 cents or 2.2% to end today's session at $8.275 per million BTU. And also on the NYMEX, February RBOB gasoline fell 7.54 cents, closing at $2.3601 a gallon. February heating oil fell 5.61 cents to end at $2.5573 a gallon. Over in the metals complex, gold futures rallied to another record high. Following Bernanke's comments this afternoon, gold prices rallied to a high of $897.30 an ounce. Previously, the precious metal soared to $894.40 an ounce. February gold ended today's session up $11.90 at $893.60 an ounce. And taking a look at other metals, March silver rallied 43.5 cents, or nearly 3%, ending at $16.275 an ounce. March copper ended the session with a small loss at $3.2835. This afternoon, we're joined by Derek Fry from O&F Futures and Options. He'll recap today's session in energy and metals and also provide his short-term outlook.
Okay, recapping the action we saw today in the energy and metal sectors. I'll start with energy. We saw a pretty strong pullback in the crude oil market. We saw it pull quite a bit below the 95 level. Frankly, at this point, we are looking to actually accumulate some small long positions on any pushes down towards 90. We really don't see crude oil falling much below 90 in the near term. Obviously, today's statement by Mr. Bernanke, is almost I don't want to call it a paradigm shift, but it's close. It was a largely unexpected event, unexpected kind of direction. Really, completely reversed the direction that the minutes had us going just a few weeks ago. So that has to be kind of factored into almost every trade right now for the very short term. Frankly, the statement really kind of hints at the strong possibility that there could be some sort of an intervention on behalf of the Fed this evening, at some point tonight. I would not be shocked if we wake up tomorrow morning with a quarter of a point cut, which of course that would be a bit of a paradigm shift right there. So just wanted to mention that briefly across all markets, not just energy and metals. So anyway, I expect if they are going to cut aggressively as it looks they are going to, that should continue to keep the bid in crude oil and all energy products for that matter. So, one of the excuses for the high energy or high crude oil prices has been the weakened dollar, and that trend looks to be about to continue. Natural gas saw a drawdown in inventories in today's EIA report. Obviously, we saw a decent rally there. We've decisively broken out above $8. At this stage in the game, I would expect to see $9 tested as early as next week. I doubt it would be tomorrow, but I wouldn't be surprised at all to see it pushing up and testing those highs that we had back in both October and July or August. I can't quite recall, earlier in the summer of '07. Moving over to the metals, we saw gold finally rush up and gently tickle the 900 level. At this point, again, all eyes being on the Fed right now. If in fact an aggressive rate cut is what's on the table, then it's likely to continue pushing gold higher. Obviously, gold has been one of the primary beneficiaries of the weakening dollar. And all things being equal, that trend also looks to be continuing. And same thing with silver. Silver's had a really explosive run, in essence, trying to almost catch up to some of the movement we've seen in gold. Would not surprise me to see gold testing the 1750 level, silver testing the 1750 level at some point early next week as well. So by and large, all eyes continue, as I've said, to be on the Fed. If these aggressive rate cuts are going to be the name of the game, then the dollar's the brief bounce or strength in the dollar that we've seen over the last couple of weeks will quickly turn back the other way, and we could see some aggressive moves to the downside in the dollar, and obviously that's going to be pushing the bulk of all of these commodities higher.
That was Derek Fry, head trader at ONF Futures and Options, with his commodities commentary. And that's it for today's edition of PM Exchange. I'm Remy Hokie. Join us tomorrow morning for your latest news update right here on ForexTV.com. Have a good night.